Welcome back to the Transcend Podcast. Again, like every episode, I am happy that you are here and joining the conversation about building a business and leaving a legacy. Now, just to recap, in the first episode or the first pillar of building a business really includes building a strong business foundation, LLC or corporation, and then getting your financial sort of documents in a row. You got to have a CPA, a tax planner, tax strategist to help you figure out what the numbers are in your business, right? Those are strong foundational things, and you don't want to build a business on top of a weak foundation. Why? Because if something happens and you don't have a strong foundation to hold you up, you're going to crumble at the first sign of trouble or the second sign of trouble or the third sign of trouble, right? Got to have that strong foundation. The second pillar, the second phase is to grow and scale. We talked about hiring employees. We talked about productizing and digitizing your services or your products, right? And then we talked about protecting your intellectual property. Okay, so how do you build these things and then protect them so that they stay with you? That was last episode. And then today we're talking about actually making the plan to leave the legacy. Now, I am not a financial planner. I'm not a CPA. So I encourage you to get both of those folks on your team. But I want to share with you some ideas of things that you can do through your business to leave your legacy, right? Your business, we're using our businesses as part of our wealth building plan so that we can leave a legacy. I looked up some statistics the other day, and it said, this one that I found said that 70% of white folks receive an inheritance from their parents, compared to, I believe, 10% of Black folks and 7.2% of Latinx folks. Okay, that's a huge difference. Unfortunately, in a lot of Black and Brown communities, money does not flow down to our children. It goes back up to our parents. And that's not a judgment. That's an observation. In order to leave a legacy, in order to build wealth, we need to change that flow of money so we can pass it on to our children. Which means we got to make sure that we are financially sound and financially stable so nobody has to take care of us, and so that we can set our future generations up already by the work that we're doing right now. So that's what we're going to talk about today. How do you use your business to leave a legacy? There's a couple ideas that I have here, right? One is very simple. Start to look at your business, your LLC or your corporation, just like you would any other business that you were going to work for. What kinds of things would you expect from that business? I would expect some kind of a retirement plan. I'd expect some kind of benefits, health insurance, right? Some time off. I would expect, what else? I would expect some company retreats. I would expect to have a credit card that gets reimbursed for business expenses. All of those things I would expect in my role as an employee for somebody else. Those are the same things that I'm going to implement in my own business. Let's talk about retirement. Okay, there's a few different retirement options that are available to you. There's a 401k that most of us have heard about. You can set up your own 401k, which I hear is pretty costly. The maximum contribution on 401k as of 2021 is $19,500. But there's also this other retirement vehicle called a SEP IRA, SEP IRA. I think it stands for Simplified Employee Pension and Individual Retirement Account. I could be wrong, and if I'm wrong, I'll correct it in the show notes. But it's a SEP IRA. That part I'm correct about. The maximum contribution for a SEP IRA in 2021 is $58,000 or 25% of your business revenue. Whichever one is lower, that's your maximum. That's a big difference between $19,500 and $58,000, right? You are making money anyway. At least that's the plan, right? With our wealth building stage. Now you get to decide what you want to do with that money. And I beg you, please don't be like your uncle or your cousin or your great auntie who had their own business and who worked in the business until the day that they died because they couldn't afford to retire and because they didn't plan for it. Make your plan now. That's one option. Think about, or that's not an option, that's a thing to do, is to think about your retirement and what kind of retirement accounts you want to set up so that you can contribute to them through your role as the owner of the business. Another thing to think about, maybe you don't want to retire in the business. Maybe you don't want to work until you're 67. I don't. My goal is to have financial independence, retire early. If I could, I would go right now. Please believe I'd be out of here on some island somewhere with a beach house looking over the ocean, waking up to fresh ocean air. You can feel it, right? That's how passionate I am about it. So maybe I don't want to work in this law practice until I'm the ripe old age of retirement. What if I want to sell it? Did you think about that? You have an option to sell your company. Tech folks think about this all the time. The goal in the tech industry is to start a company, build it up, and get bought out by a tech giant like Google or Apple or Facebook, right? That's the goal over there. But a lot of times in our communities, we don't think about that as an option. We think about, we need this job. But it's not a job that you have anymore. It's a business that you're running. And one of the ways to profit from the business is to also sell it. So maybe you build this business up until it has a certain amount of revenue, and then you start shopping it around so that you can sell it, get the capital, and then do something else with the money. That's an option, right? There's some other things that you can do just on a daily basis or an annual basis as you file your taxes. Any expenses that are related to the business become a tax-deductible expense, or they at least reduce your tax liability. Now, again, I'm not a CPA, so you want to have a CPA who's well-versed in the type of business that you run so they can make sure that you get all of the advantages that are coming to you or that are available to you as a business owner. Another thing you can do is you can hire, if you have an LLC, you can hire your children as employees and then pay them up to $12,000, which is a non-taxable expense. They also aren't paying taxes on it. So now you're paying your children. They have to be your children. And I don't know like what, if you have like your niece or nephew living in your house, you'd have to talk with an expert about that, probably a tax person or a payroll person about that. But there should be your children. And you can pay them, you're going to give them money anyway, right? Like they got to eat, they got to go socialize, hang out with their friends. But maybe you can teach them some business skills, teach them how to have a job. And then instead of just giving them the cash, you are now running it through your business. So your business is paying them. They're learning some stuff about business. And then on the flip side, on the receiving side of it, you can decide whether or not your kid just gets the money or if you want to put it into a retirement account for them or a 529 college savings account for them, right? These are some options. How much help would that be to set your kid up early for some college savings? Like that would be amazing. I don't know about you, but I was fortunate enough to have my undergraduate education paid for, and then I got all these student loans for law school. Whereas if I would have had that, that savings to even put a dent in it for law school, it would have helped a lot on the way out, right? But I'm managing. But as I graduated, I'm graduating, a whole house in debt instead of starting at zero. So, that's one thing I want you to think about for your children. And then I just want you to realize that with your businesses, with your LLCs and your corporations, you have control over the money. You get to decide what you're spending money on. You get to decide what benefits you want to give to yourself and to your employees. You could do health insurance if you want. And at some level, you'll be required. At some number of employees, you'll be required to do it. But you could do it with just you or with just a handful of people. You can reimburse for gym expenses, right? I'm talking about leaving money for generations to come, but also how to take advantage and keep more money in your pocket right now. And that is, you get there by understanding what items are tax deductible. So you're reducing your taxable expenses now, keeping more money in your pocket, which then allows you to put more money someplace else that you can use later on down the road. So I just want you to think about those things and get together with a CPA and a financial planner and whoever else is going to benefit from you, so your spouse or your children, and just think about what is the vision, what is the legacy that you want to leave for them. It doesn't have to be $1 million. It would be great if it was, but even if you just leave them $50,000, that's a big help for people, right? Nothing is too small, but if you don't start planning now, then it's going to be really hard to just find the money when you get there later. Also remember that you don't have to work yourself to the bone. These businesses, while you created them most likely for your passion, the business needs to work for you. It needs to get you to where you're trying to go. So don't hesitate to do that. Think about it. Really think about it. Plan it out. Meet with the folks who can get you a plan. And once you start making that money in your business that you can finance your plan, you can fund your plan, do it. Put it into action. You will not regret it. You will feel extremely accomplished. And after all, what is it all for anyway? We want to help the people that we're serving. That's true. But also we need to remember to help ourselves and to help those who are coming behind us. Okay? So those are the 3 pillars for building a business and leaving a legacy. It's having a really strong business foundation, LLC or corporation. It's growing and scaling your business, which can happen at the same time as you are actually planning to leave a legacy. Figure out a wealth plan, put it into action, fund it, and then leave it for yourself later and for other people who are coming after you. That's how we're going to change our personal situations, our family situations, our communities, our neighborhoods, and then our position in the world. So let's do it. All right. I will see you on the next episode. Have a great week and take care.